Welcome to the Permanent Lifestyle Podcast. This week's episode, I interview April Ranallo, who is the Vice President of Mortgage Loans for Guaranteed Rate. Guaranteed Rate is one of the largest mortgage companies in the entire country. They do mortgages in all 50 states. During our interview, we basically talked about, can you get a mortgage during the COVID-19 crisis? What do you need to get a mortgage? What has changed? What is the interest rate? What is a credit score? How do you improve your credit score? What things affect your credit score? We talked about a bevy of things that are really pertinent to the home buying experience, especially how it relates to the COVID crisis. So I hope you enjoy our episode. We are live. It looks like we got the live stream going here on Facebook. So if anybody's joining on there, welcome. Let me get it going here. All right. I am William Schultz, and this is the Permanent Lifestyle Podcast. Basically, a permanent lifestyle is just kind of a lifestyle that's filled with, positive thought and positive consumption. And it's kind of, I was going through some things my whole life and had to make some permanent lifestyle changes, whether it was my health, my diet, my mindset, just the way I was living my life, my lifestyle. And I thought about the fact that there wasn't a lot of positive things going on in social media, and I've always wanted to look for places that I could find some positive things that I could consume, and that was difficult. So I figured, hey, you know what, let me create something for people out there that are looking for the same things I were back then. So I want to thank everybody for joining us. Today, we have a special treat. We have April Ranallo. She is the Vice President of mortgage loans for Guaranteed Rate, which is one of the largest mortgage companies in the country, and they do mortgages in all 50 states, and I'm sure she'll tell you more about that. I met April about almost 2 years ago in a Business Networking International. That's also a BNI group, and I really had taken to her because she really knew her stuff when it came to mortgages. And I've talked to different lenders in the past, and a lot of them just kind of seem like they're just kind of like mouthpieces or sales extensions of the bank. But when you talk with April, I got a different experience, and hopefully we can kind of reveal some of that today, because when you talk with her, it's like you're really talking to an expert, someone who's really in there in the trenches, someone you're actually dealing with, in a more transparent and detailed way. And I don't think you always get that with all lenders. So that's how I met April. And so we want to welcome her here today to the Permanent Lifestyle Podcast. April, how are you doing today?
Fantastic. Transparent is probably a pretty good word.
Is it? Yeah.
I think you mean straightforward.
Yeah. No BS.
Yeah, right. Exactly.
Well, I know that I've had my own experience. When we, recently put some offers on some properties and looked at some properties, and whenever I needed you, you were like right there, and you had everything. I mean, I remember you were on vacation in Florida and you were still getting me, paperwork. So that was awesome. So, you're heavy in the game. I'll say that. Well, so April, tell us a little bit about yourself. Where are you from, and how did you get into the mortgage business?
Let me see. So I'm from Minnesota, born and raised here. When I was about 29, I moved to Chicago for 10 years. And then I just got back here a couple of years ago. But I've been doing mortgages since 1999, so really long. I was really young. Never thought this would be my career. And now people ask me like 20 years later what I'm going to do when I grow up, and I'm pretty sure this is going to be it. Or if not, I'm going to have a rude awakening at some point. But I started off in the subprime game. This is back in the day when if you were breathing, you could get a loan. And did that for about 10 years, worked for some banks and brokers. And then after the financial crisis happened, I started with Guaranteed Rate. So I've been with Guaranteed Rate specifically for 10 years, in which case just doing all sorts of financing that way. But Guaranteed Rate is a mortgage lender. So here's a little mortgage 101 for people. There's 3 different types of institutions that you can go to get a mortgage. There's the banks, so you go to Wells Fargo, and you can get any type of product you want from Wells Fargo. Then on the other side, you have brokers, which a lot of people have gone to in the past because they're known to shop for your mortgage so that you can try to get the very best rate out there. The concern with the broker, so to speak, though, is they're a middleman. So they kind of just pass paperwork back and forth, which I'm a control freak, so that's not enough control for me.
April, what would be the example of what a broker is?
What do you mean? What's the example?
Well, you were saying a broker is different from you're an actual lender. So like, is Wells Fargo considered a broker, or like,
Nope.
No?
Hold on, let me finish. This will make sense.
Okay.
So bank is Wells Fargo, right? Broker is XYZ broker. Then you have what's called a mortgage lender, and that's kind of like a hybrid of the two. So we process, fund, underwrite, do all of the transaction of the mortgage ourselves. We lend our own money initially, just like a bank would. But the correspondent lending piece is that we are partnered with all of these different investors and banks. So we get the shopping aspect, just like you would with a broker, in one stop. So I pull your credit once, and based on people's specific criteria, like I will just know who has the best rate and be able to lock with them. So it's kind of like a best of both worlds. The other reason I tell people that it's great to go with a correspondent lender is because they tend to have the best rates. We do $35 billion of mortgages. At least that's how much we did in 2019. 2020, I'm sure guaranteed rate will probably be close to like 45 billion. So we give institutions and banks millions and millions of dollars a month. Okay, so Costco style, right? If you go buy one package of toilet paper, it's going to be more expensive than if you were to buy an entire case. Same concept. We give so much money to different institutions that we get wholesaler better pricing, aka better rates for the clients, than if you were to just go into a particular bank for your individual loan.
All right. Do you think that there's any particular advantage to that business model right now during this pandemic that we're going through?
Yes, we're still giving loans.
Okay. And so are you saying that there's other banks, other institutions that aren't able to give loans right now?
Mm-hmm. Yeah, there's a lot of institutions right now that have actually cut off all applications altogether. There are some institutions that are only taking purchase transactions. They will not take any other refinance transactions. And then throughout the industry, certain guidelines have changed. So that's for everybody. But to give an example, FHA loans, you only needed a 580 credit score to get. We have now changed to need a minimum credit score of 620, which is what it used to be maybe about a year or two ago. There's other banks and institutions that have increased it all the way up to 660 for them to take. So just depending on people's thresholds, I should say companies' thresholds determines what they can and can't do right now with kind of the pandemic.
For those out there listening that might not know, could you explain real quickly what is an FHA loan?
FHA loan is just, a lot of people know it as a first-time home buying loan. It technically can be for anybody. You do not have to be a first-time home buyer to get it, but it is a loan that is guaranteed by the government. So because the government essentially guarantees the bank that if a foreclosure happens, they will get their money back, the guidelines on that type of a loan allow lower credit scores, higher debt ratios, lower down payments, things like that. So people tend to call it a first-time home buying loan just because a lot of times when you're buying a house for the first time, you don't have 20% down with an 800 credit score and things like that. But
could you have owned a house previously and then not use an FHA loan and still qualify for an FHA loan?
Yep, and you can do multiple. You can have multiple FHA loans throughout your life. The ruling is that you can only have one FHA loan at a time. So that's kind of the kicker there.
So, and the advantage to that is that you're going to have a lower down payment. And what is that percentage of down payment typically for an FHA?
3.5% is the minimum for an FHA.
Okay.
Conventional loans, you typically need 5% down. There is a special program that allows you to put 3% down, but it has income qualifications and things like that for that type of product.
Is there a typical
VA loans, you only need 0 down.
VA loans, you said?
Yeah, and VA loans are for veterans, military personnel, or spouses of deceased veterans, which a lot of people don't know that they're eligible for those benefits as well.
Okay, that's something I did not know. So for any veterans out there who aren't in home ownership get on it, because zero down now. And then April, can you do the duplex or triplex or fourplex with the VA loan as long as it's under
Yes.
5 units?
The key with the VA loan is primary residence.
Okay. And could you
Yeah,
explain what
so
that means, primary residence?
you're going to live there.
Okay. Okay. Is there a
Yeah.
certain term that
So
you need to live there for?
no, not with the VA. Like FHA rules. I mean, there's a lot of things, and I always tell people make sure you consult with your mortgage professional because guidelines and rules change right now daily sometimes. But things change a lot. But with FHA, FHA and VA, they're both government programs, so that's why they kind of get grouped together on different rules and guidelines. But it needs to be, they're set up to be for primary residences. People buy homes, if it's not primary for yourself to live in, they buy second homes, which would be vacation, beachfront, cabin up north. And then there's investment properties, and investment properties as rentals, to obviously make the money. For a residential loan, the structure needs to be either a single family home, a condo, or a 1 to 4 units. So anyone that's interested in buying rental properties that are 5 units or more, those are actually commercial loans in apples to oranges. So you would definitely want to talk to a commercial lender about that stuff.
Okay. So just to clarify for the listeners out there, any of you guys that are looking to get into maybe an investment property, which would be a duplex, a triplex, or a fourplex, you can qualify, or you can get a residential mortgage on anything that's 4 units or less. Once you get to 5 or more, you're going to be in that commercial area, and that's where you're going to you cannot get a residential mortgage on that. And something that I know from just talking with April is that on those residential properties, it is required that you're living there at least 1 year for you to qualify, correct? To legally qualify for that?
Yeah, you're mixing it up. If you buy an investment property, you can rent it immediately. But investment properties require 25% down. Okay. A lot of people that are starting out, either first home or starting to try to build their portfolio, will buy a duplex, 3 unit, 4 units. It is still a primary home if you're going to live in one of the units. That's fine if you're going to live in one and rent out the other one, or live in one and rent out the other 3. Kind of what you're referencing, William, is if you buy a single family home, you are signing documentation that legally says you are moving into that property within 60 days and that you're going to maintain occupancy about a year. I mean, we say anywhere from 6 months to 12. 12 months is probably more safe. Then if you decide to move out and rent it, that's not a problem. You don't need to change your mortgage. You don't need to change any of your financing. That's perfectly allowed. And then you followed the rules legally so that you didn't do mortgage fraud.
Right. Okay. Perfect. Thank you for clarifying that.
Yeah.
Very valuable, not only for myself, but for the people listening. So I want to pivot a little bit. You had briefly talked about things are changing really fast. And before we got on this call today, you're like, look, we can't talk about what mortgage rates are now because they're changing so much. We can only kind of generalize. That's how crazy things are. So I kind of wanted to talk a little bit about mortgages during the pandemic. How is it changing the landscape out there? And let's kind of maybe eliminate some of the falsehoods out there, because again, like you had said, some banks aren't loaning money, some places aren't loaning money, but your institution in fact still is. So, let me just start out real quick because, I am not the most savvy person when it came to real estate a couple years ago. So I have a really simple question, but this might be valuable for some people listening. What is an interest rate and what is its importance when it's related to mortgages?
It's money. No, I mean, interest rate is just like anything else. It's an interest rate that you pay to borrow the money from the bank, in which you're going to pay back for borrowing the money. The reason I joked about it, and this has to do, you guys, for mortgages at any point, okay, whether there's a pandemic or not. Interest rates, mortgage interest rates, so to speak, are controlled by mortgage-backed securities, something that you're never going to see or never know how to monitor, okay? A generic rule of thumb to follow is if you kind of follow the 10-year bond history, whether it's going up or down, it can kind of tell you how mortgage rates are going to move. But having said that, for example, during the pandemic, in the last 2 months, I've had a 30-year fixed interest rate on a conventional loan be anywhere from the low threes to 5%. Okay. That is not normal. Rates do not normally shift almost within a 2% range in such a short period of time. Having said that, they can go up an eighth, a quarter, half a point, depending on where the market's at. What a lot of people don't know is interest rates can change throughout a day, let alone on a daily basis. So a famous call or question I get all the time is like, hey, I'm looking to buy a home. I think I want to buy a home in 3 to 6 months. What's your interest rate? It doesn't matter what my interest rate is because you are not going to lock in a rate until you have a contract signed. So it's always good to have a general idea of where the market's at so that you can figure out budgeting, what's an accurate payment you're comfortable with, around what range do you want to buy a home in. But until you have a contract in place, that is when you would want to compare two people of who's got the better rate. And you got to compare the same day, the same morning, etc. Because you could talk to one person in the morning and then get wrapped up at work, and then the afternoon talk to the other person, and it could be different, but things could have shifted throughout the day. So I think it's very important to shop for a rate, compare 2 or 3 people. You don't need to go more than that. Our world is very similar. Compliance is, extremely high, but just make sure that you're giving the people you're comparing a fair shot by doing it at the same time after you have an executed contract where you could actually lock in a rate if you wanted to. So go ahead.
So basically an interest rate is like if you're into the, mob movies like Goodfellas and Godfather, it's basically you're getting some money loaned and this is the VIG, they call it.
You got to pay Guido some money to get the money.
That's right. Otherwise, the bank's going to come break your legs, right? Or take your house.
They'll just make you move out, yeah.
Right. So I just wanted to make sure we covered that. And, because I just know that some people don't always understand, when you've been renting your life, most of my life, I've been renting. So once I started looking into home buying and stuff, I didn't really know what an interest rate was and how it was determined and what the importance of it was. So, so I got a question for you. There's a lot of stuff going on right now. I do real estate photography, so I know there's a lot of houses that are on the market. I've been shooting a lot of houses. I'm grateful for that, but I've also noticed a lot of them are being bought real fast. So there's buyers out there and there's sellers.
Oh yeah, the purchase market's insane. There is not enough inventory out there at all.
Yeah. So what are some of the biggest falsehoods out there right now about the mortgage business in terms of the pandemic?
Well, I don't know. I guess the biggest thing is I've had people call to ask if we're still doing loans because they've heard that people have stopped doing mortgages. Yeah. There is a lot of places that are doing mortgage, especially if you're buying a home. Like I know a lot of places that are doing financing for purchases. As far as refinancing, like I said, there's plenty of people that are still doing it. That's probably a rumor. The thing to be aware of is guidelines are changing, so something that you may have heard 6 months, 12 months, something that you need to double check on. But there's a lot more verifications. So people that are doing refinances, we typically do a verification of employment. Well, a lot of people are getting laid off and furloughed right now, which is sad. So beyond having one done initially, you've not cleared the goalpost at that point. Like right before you're about to close on that mortgage, 45, 60 days later, we are going to re-verify that you still have your job. So for example, I have a client who was supposed to close this last week, but he just got furloughed to be 4 days versus 5 days. So I had to see if he was going to qualify with 80% of his income, not 100%, because that's how much he's working right now. And unfortunately, he doesn't. So everything has to get put on hold until he goes back to work 5 days. Hopefully, it should only be a few weeks. Once shelter in place gets released, he'll be back. But that's just kind of something to be aware of for those that are in the middle of the transaction is, some things can change. Yeah. But people are taking advantage of refinancing because rates are low, they can drop their payments, they can take cash out to help pay some bills or just put a little extra money in the bank in case something does happen.
Yeah. Like that. So the rumors say, like, I guess what I want to know is if I'm an interested buyer, if before the pandemic, if I was kind of sitting there thinking, I've kind of always wanted to buy a home, or I'm thinking about moving out of my current home and getting a new one. is it a good time to buy? Is it safe to buy? Are we allowed to buy? Is the market open?
I'm essential. Yeah, I don't think the pandemic has anything to do with that at all. I think people just use the pandemic right now to have an excuse for anything. But actually, I shouldn't say that. A big change is the way business is done. So business is still booming. It's active. There's multiple offers going on homes. So I think people that are looking at homes right now and buying or shopping are very serious. They're not like, oh, I think I want to maybe look and see what's out there. They're just not taking the risk of doing that. But when I can do a loan from start to finish where you have no physical contact with anybody else, which is kind of scary in one way. But they've come up with new rules to have appraisals done where, the appraisers can deal with the current homeowner kind of remotely. When you get to signing paperwork, we have curbside closings right now. It's like a drive-through at McDonald's. Like you pull up to the title company and you sit in your car and you sign away your life for a $300,000 house on your dashboard, and someone runs papers inside the office and back and forth. Like, it's a little different than sitting around the table with 8 people, with the attorneys and realtors and title people and the sellers and buyers. So slight changes, but obviously just for the safety of everybody. So that's great. But outside of technicalities, I think the industry is just the same and better than ever than it was, or that I should say that it was a couple months ago.
Yeah. So you're saying there are some differences, right? And it sounds like some of the differences are just maybe like your credit score might have to be a little higher than it was pre-pandemic. Could you go over, are there any other differences that we need to touch on that people, if they're looking to buy a home, and they were looking at it pre-pandemic versus right now, post-pandemic, what are those changes going to be and how should they be preparing themselves for those changes?
I would simply say if somebody had a pre-approval done already to buy a home, to touch base with your loan officer and make sure your pre-approval is still valid. Just to make sure that there was no guideline changes. Like you said, credit score changes. Some files you need reserves. Reserves are money you're going to have left in the bank after you buy the home. After you bring $20,000 or whatever it is to closing, you still need X amount there. So just re-verify that your pre-approval is still good, or if there's any changes that need to be made. That's it, though.
How does somebody go about, 2 things? What is getting pre-approved, and how does somebody go about getting pre-approved?
That's actually a question. So I would say a lot of people are afraid to talk to a loan officer if they're looking to not buy for 6 months or a year. So like, oh, I'm not ready, I'm telling you, 6 to 12 months before you want to buy a home is the key time to talk to somebody like myself. Reason being is we are going to run numbers. I have a lot of come to Jesus conversations with people. There's times where they want to spend $250,000, but then once you really get an idea of what that payment's going to be per month, they're like, oh, I really didn't want to spend that much, which is great. Like, consumers have gotten smarter to buy in relation to what they want to spend, not what they qualify for. Because you can qualify on paper for a lot more than what you have available in life. But it's just important to make sure that the purchase price you're looking at is going to follow suit the monthly payment you're looking for. And if not, you may need time to maybe pay off a car so you don't have a car payment and can afford a higher mortgage payment. If there's anything that needs to be done with the credit score, sometimes that can take 6 to 12 months to fix. So if you have it all laid out ahead of time, it just buys you time in case you need time. If you're right where you need to be, great, fantastic. I could not tell you how many people have called me that are like, oh, we're not going to buy till next year. I'm like, great. We look at numbers, and I get a phone call 2 months later with the house of their dreams that they just found and they want to buy now.
Right.
Super common.
Yeah.
So,
if
not, there's no cost, there's no obligation to do pre-approvals. You should be checking your credit to see where it's at. And if you do a pre-approval, you get it for free, and it's a effective credit report. So
let's talk about that real quick then. Qualifying, how do I qualify for a mortgage? And what are the main things that that we as consumers need to have in place and should be watching for and should be getting prepared for as we start thinking about buying a home in terms of your credit score, the kind of cash we might need at closing, and things of that nature?
So minimum credit score right now is a 620. And like I said, generally speaking, you need 3.5% down. I tell people that when you buy a home, there's cash to close. So cash to close is going to be your down payment money, closing costs, and then escrow setup. Escrow setup is money that's collected ahead of time to handle property taxes and homeowners insurance. So there isn't an easy way to give you like you need 20 grand, because there's down payment assistance programs that could be available depending on someone's situation. I do loans in all 50 states. You buy something in New York, you pay a lot more closing costs than if you buy something in Minnesota. So that's why you just have to call and have a conversation with a mortgage professional to kind of give you a better idea of how much cash you need. And you need a job. You got to have current income. The hardest part is that you need current income that is reportable. So if you are self-employed and if you have a good CPA, you probably don't pay taxes on everything because your CPA is trying to make sure you give Uncle Sam the least amount as possible. Yeah. Unfortunately, when it comes to a mortgage, it's the opposite advice that you're going to get. But not to kind of be a broken record, but if you talk to a mortgage professional the year before you're thinking about buying, I can look at a self-employed person's tax returns and say, okay, you're right on the money. You're in a good spot. Or, hey, sorry, you're going to have to claim some more income in order to buy a home. Let's make sure we have those discussions now so that you're prepared when you do taxes next year, that you will have the opportunity to buy a home. You're not going to delay yourself another year.
Yeah, I know I was in that boat. I think I was going through a tax thing a couple of years ago, and it was actually better for me to not only have more income on the books, but for that purpose, but also because that's around the time we had met, and it was showing that I was making more, and that long term for me to jump in and get into a property was going to be beneficial for me to have more of that on record because I'm 1099. So,
I'll get a lot of drafts of taxes in March.
Yeah.
Just in case there needs to be some tweaks, I can be like, hey, sorry, you got to pay the government a little bit more money in taxes.
Let me ask you this then, April, because that brings up a good point here. Taxes are now not due until July. So if somebody's coming to you right now or before July, what are you going to look at in terms of for their tax returns? Are you going to be looking at 2018 still?
Well, if you're a W-2 employee, I'm looking at your W-2 and your current pay stubs. If you're self-employed, longer than 5 years, I typically only need to go off of the most recent tax return, which would be 2018, if you have not filed 19 yet. If you are self-employed under 5 years, it has to go off of an average of 2 years, in which case I would be looking at 17 and 18.
Okay.
So 19 may have been a great year, but if you haven't filed the taxes, it doesn't matter. You got to get your taxes done.
Okay. So if you're in a 1099 self-employed and you had a good year in 2019 and you want to maybe get a better qualification, you probably want to get those taxes filed before we come.
You want April to look at the draft of your tax returns.
Okay.
And then if she says it's great, then you file.
All right. Good. So when we're talking about trying to qualify, just to recap, we want to have a 620 credit score. Where can somebody like me figure out what my credit score is without getting a hard, credit check or something?
To be honest, you want to just do a pre-approval with a mortgage lender.
Okay.
Reason is, it's actually a good question, because there's two things. You've got like Credit Karma, or a lot of people's credit cards will give you an idea of where your credit scores are, which is fantastic. It's a great way to monitor your reports, make sure you stay on top of it. But what people don't know is there's different algorithms that are ran based on who is pulling the credit for what. Okay. So you may look at Credit Karma and my favorite is when people tell me they're a 900. No, newsflash, 850 is the highest credit score you can have. But they're like, it's great. And generally speaking, their credit is probably really good. But when I pull a credit report, it's going to be mortgage specific. So the scores can be different. So general idea, like I said, credit cards, Credit Karma, all those are fine. That's what I would use. If you are like, yes, I'm serious about buying and I'd like to buy once again in 6 to 12 months, have a mortgage person pull your credit so that you make sure you're looking at the correct numbers of where you're at.
Because I know with me, I have been paying for the Experian, their app and their software, which kind of gives me somewhat of an accurate, but it's different from when you pulled my credit. It's completely different. I want to say it's probably the Experian stuff is showing me maybe 30 points higher than I actually.
Yeah, I think it was like 20 or 30 points.
Yeah. So I would say, for those that are listening and who are looking at Credit Karma and some of those other apps out there, and they're just trying to get a general baseline, would you say, hey, if so-and-so says you're at 750, you might be more at, a 700 or a 720 or something like that?
Generally speaking, I mean, it kind of, do they have any mortgage history? Somebody that may not be owning a home now, their credit score may be just the same when I pull it because they've got previous mortgage history. Other people that don't have mortgage history, I might be lower just because the algorithm is noticing that, yes, you pay your bills, but you haven't paid a mortgage.
Okay, that makes a lot of sense because that's the kind of boat I'm in. And I've never had any other issues other than that. So that, that does make a lot of sense. We'll talk about, just real quickly to just go back on credit real quick, and then we'll switch over to refis before we take questions. What are things people can do to build their credit or keep their credit where they're at, besides, just obviously not having late payments and stuff, but I know that I subscribe to I never spend more than 30% of my credit that's available. I know that I pay in full amounts. I don't just do payments, but that's me. Some people aren't in my boat. So what are some things people can do to kind of have that credit, not only to build it, but maintain it once it's built?
Actually, so here's a couple different things. One, try to have at least 3 active trade lines. And when I say a trade line, that means 3 different types of accounts that are going to report to your credit. Student loans, credit cards, car payments, mortgages, timeshares, personal loans, things like that are actually going to show up. People that are trying to build credit, there's what's called secured credit cards. If anyone has questions, I can always answer those later. But or sometimes you can reach out to your cell phone companies and ask them to report to the credit report. But essentially, you want to have 3 open things on your credit.
Okay.
Online, on-time payments is kind of a given. And 30% is pretty conservative. If you can keep the balance that you owe on a credit card below 50% of your limit at all times, that will help give you the best score. A lot of people don't know that trick because if you pay your credit card on time, that's great, but there is below the 50% is kind of a sweet spot for getting higher points. Now, having said that, there's a lot of people that pay their credit card off maybe in full every month, but they have to remember that when the bill is due is not necessarily the day that the credit the credit card reports to the credit bureau. So people get mad. They're like, I don't owe that balance anymore. And it's like, I'm sure they don't. But on the 17th of the month, that was what the balance happened to be.
Yeah.
So if you're really trying to actively build it up, you kind of just want to keep it below 50% at all times. So, because you don't know when it's going to report necessarily. Okay.
Yeah,
but
I have 2 newer credit cards in the last couple of months, and they're still not being reported yet, So.
Yeah, and credit, any kind of credit line usually only reports once a month. Some take, every couple of months that they do it.
Okay. Yeah.
In relation to bad credit, like maybe you had charge-offs or collections or something like that, trying to clean up to help improve your credit score. You are better to, let's just use a collection, for example. Okay, medical collections are not negatively impacting your score like they used to in the past. So don't get too worried about medical collections. But cell phones, I'm telling you, they're the biggest kicker. So many people or some stupid cable collection because the company thinks they didn't return their cable box. Call and get those handled if they're within the last few years. Now, you can usually negotiate, so much money on the dollar to try to pay them less, but you're better to have it report as a settled for less than the full balance than you are to leave it out there as a collection.
Okay.
Now, I just had a client, I was reviewing their credit this morning. They have a collection from 2014. I don't care about it. if they were to go and try to fix that or update it right now, it would actually make it like reactive, or it would like reactivate that trade line. So something that hasn't reported in 6 years getting reactivated is going to hinder them more than just leaving it out there.
We have a quick question from Monique. She's a real estate agent here in the Twin Cities. She said, what about student loans? How do they affect your credit score?
Just like everything else, unfortunately. So if there's late on student loans, it's going to negatively impact you. Now, student loans have like not forbearance agreements. Oh my God, why can't I think of the word? Where they basically make you not make a payment for a year. That's okay. Those will not negatively impact you. It'll just show that a payment is not due until September of 2021. Okay, great. That happens all the time. But if someone's late on their payments, it's going to negatively impact them as if it was a credit card.
Okay. But again, like you just mentioned earlier, conversely, if you're making your payments, that's also going to, help boost it, right? Correct? Or at least maintain your credit score? Okay. All right. Well, let's do this. We got about 10 minutes left before we'll take some questions. So I want to just pivot to refinancing because with there being a pandemic right now, people may be looking at their current homes as a way to try to find some extra cash or get some extra cash in their pockets to help them get through
For sure.
This next couple of months. So is that something that you're seeing right now? And can people still refinance their home right now during this time?
Yeah, 80% of my loans right now are refinances. We still have purchases happening, but there's a big boom when it comes to refinances. So people are doing three things. They're refinancing actually to lower their term. So I have a lot of people that had a 30-year fix. They've had their loans for a couple of years, and the rates are so good, they're able to go to a 20-year or even a 15-year, and their payments are either staying the same or even maybe going up a little bit. But what people do, like if you cut 8 years off of a loan, it could save you $100,000, $250,000. Like the number is insane on the long-term effects, even though it may not be changing your monthly. Okay. Then I have people that are looking to refinance, drop the rates to save some money, $200, $300 a month, just to kind of help with their monthly expenses. The third thing is taking cash out. So rule of thumb is in order to take cash out against your property, you can go up to 80% of the value. So house is worth $100,000, your loan amount can be for 80. Okay. Now that 80,000 has to cover the first mortgage that you'd be paying off, and then closing costs, escrow setup, and whatever the difference is how much cash you can get. And then people are using the cash to either pay off debt, or people are home right now. They're noticing a bunch of like home improvement projects that they want to do, paying for kids' colleges, realizing that they want to invest in stocks because stock market's crazy right now. So they get the cash out to maybe do some investments that way. I mean, I don't care if they go to Vegas, really. They can do whatever they want with it. It's their money.
Sure. April, is there like a two-part question. If I got a home on a FHA loan, can I refinance?
Yes.
And what is okay? So that's a yes. How long have I had to be in my home or my property before I can refinance? Is there some kind of a term?
There isn't really a technical rule, but 6 months. Like you technically need to be on title for 6 months of your home.
Okay.
To have all options available.
And is there anything that's going to disqualify you from being able to refi? Like, what are the guidelines, or what are the guidelines, or what are the qualifications to be able to get refis?
I mean, it's the same rule as buying a home. You just need the credit score and the income and everything else. I would say the biggest thing with a refi is there has to be a benefit. Before the crisis and our industry, got the rap of used car salesmen, people were just using their houses as cash machines, or some people, vulnerable people were being taken advantage of and having loan officers repeat and do multiple refinances just to try to skip a month of payments. There's so much compliance now. There has to be a justifiable benefit to doing a refinance that's far more than you just get to skip a month.
Okay. So if I behind on my payments or something like that, or when I bought my house, I had a good credit score, and then since owning it, my credit score has dipped. and it's below 620, I'm probably not
You
going to
can't
be
do a
able to.
loan. You have to have a 620.
Okay. Just wanted to make sure. So for those of you
Yeah.
out there listening, the same rules are going to apply when you're buying a new home to when you're going to refinance. It doesn't change once you've already owned a home, correct?
Correct. Yep.
Okay. Awesome. Well, I want to open it up to some questions out here to anybody. Oh, and Leah chimed in and said the word for the student loan is deferment.
Thank you. I was like, why can I not think of that word right now? Love
Does
you,
anybody
Leah.
have any questions? If you want, just put something in the chat, wave your hand or something, and I will unmute you if you have any questions for April.
One thing I want to just throw out there for you guys that do know anyone that's interested in purchases or refinances, like I said, I can help in all the 50 states if you have people elsewhere outside of Minnesota. Guaranteed rates, we're very big on the VA loans for veterans. So we have a lender fee. A lender fee is what we get paid to do the loan, underwrite, process, fund. It's a big paperwork fee, right? Doesn't matter whether you're doing a $50,000 loan or a $5 million loan. And our lender fee is $1,290. For all VA loans in 2020, we are actually waiving our lender fee. So veterans not only get the best loan possible, which they should, they've earned it. We are waiving the fee, and they just have a lot of advantages. You can buy a house for nothing if you're a veteran, which is great. Yeah. The other thing about that is that we are approved nationwide for all the different state down payment assistance programs. There's a process that lenders have to go through to be able to do those with the state, and we are able to do those as well. Okay. Mind you, some of those guidelines are kind of tightening up with everything because the state's funding is in question, but I can be a resource. Outside of that, conventional VA, FHA loans, we also have a ton of outlets for different portfolio or broker options. If anyone ever has any questions on that, but an example would be somebody who's self-employed that maybe does not claim enough income on their taxes. There is certain portfolio lenders that will let us use 12 months of bank statements to figure out income. So basically out of the box, not the norm kind of situations, I'm more than likely have a resource or an outlet for those as well. So that's my pitch.
Could you put your email and your website in the chat box for those people that might contact you later down the road? And again, you guys, we're opening it up for any questions here before we wrap up. All right, we got a question here. This is coming from Monique. She asked, do you offer assistance with clients who are trying to build their credit as far as guidance?
Yeah, absolutely. I am not a fan of, oh my God, it's definitely Sunday. Companies credit repair companies, okay? If there's certain situations, they can be very helpful to pay them to do that. But there's a lot of things that I can tell people to do that they just have to do it, or they need to figure out how to get the funds to pay something off. So if they're willing to do an application so I can take a look at the credit report, I can run through it and give them what I call the yellow brick road, which is pay this off, open an account, take out a secured credit card, pay this balance down, do this. Once all that's done, call me 30, 60 days later, because that's how long it would take for the credit report to update. And then we can recheck it again. So for sure. And I actually like it. First time home buyers are fun because they listen.
Having gotten to know you the last couple of years, and we are in a business networking group together, I get to hear a lot of the stories, and I can tell all of you guys out there listening that what she's saying in terms of how much she goes, how much she puts into helping her customers and first time home buyers and helping them figure out, because I've heard some stories of people who are just barely almost there to qualify, and they moved a couple things over here, changed a couple things over there legally, obviously, and they were able to make it work and get these people into their homes. So you can definitely, if you're interested in someone who's actually going to work with you, I would definitely recommend April. Here, we got Kenny here. I'm going to unmute him. He wants to ask a question.
I just got one quick question. Like everything has kind of been in line with what I found. So is it standard, or is it something that you guys practice? So let's say you're an owner occupant of the 1 to 4 unit property, to count, like let's say there's 3 open apartments and then you have the one, to count 70% of the lease. What would be the standard lease? towards income as far as the qualification for the loan?
It's actually 75%.
Okay.
Yep, and that's true. So if you buy a multi-unit, you can use 75% of future rents
Yep.
that to go towards your income, which is why multi-units are great a lot of times.
And then
they pay for a big chunk of your mortgage.
Right. Yeah. Well, so I when I talked to the girl that I talked to as the realtor, the mortgage company that I was talking to, I just wasn't sure if that's like industry standard or if it was something that they did. The second question that I have, so have you done lending like in North Minneapolis?
I have a duplex in North Minneapolis myself.
Okay, so my understanding is, and I don't know if this is still true or not, but they have some grants for redevelopment for buying properties in certain areas in North Minneapolis. Is that correct?
I don't know the specific grants. There is certain areas throughout the cities though, like Dakota County has one. So I don't know if there's an active one in North Minneapolis. I know that those programs exist, but not off the top of my head. It'd be something I have to get back to you on.
Okay. I was just curious because when I was talking to Ashley, she had told me that they had a redevelopment grant of like $11,000. So like, because what I'm trying to do, you know, when we were talking with, what was the guy's name that?
Dan.
What's that?
Dan.
Was that the guy we were on? Dan
Kruger?
Kruger, yeah.
Yeah. So when we were talking to him, you know, given my situation that I have like all of these pieces ready, but I'm missing this one piece, he said, well, kind of one of your best bets is to do a partnership, you know, with somebody. Or, you know, then I've been reading about house hacking and doing all these other different things because so then the redevelopment grant and the first time the $7,000, like I'm trying to finesse, like, how do I make this first property happen? You know, once I finish educating myself about, you know, where do I want to be? What are my, you know, criteria? What does all of this look like? You know, like, how do I get the first one rolling? Like, that's the challenge where I'm at right now. So
Kenny, can you put your email in the chat box? Monique, who's a real estate agent on the call here, she has a link to that information for the north side stuff.
I was gonna say, a lot of times those grants too are after you purchase them. The redevelopment is to help give you cash to make improvements and things like that, which is after I'm kind of out of the picture. So Monique's probably got it.
Yeah.
Okay.
Do we have any other questions before we wrap things up? Just you can either type your question in the chat box or you can raise your hand.
You don't want to unmute them? I think we trust them all.
Well, some people what happened? Some people got different sounds going on in the back.
That's true. That's true.
You know, better than a
I mean, you guys, if you ever have questions, okay. I mean, I'm joking with William because William and I have known each other a long time. I'm really straightforward. You know, like I should have been born in New York probably, but the other thing is my biggest strong suit is I am a huge problem solver. So not to be crass, but like tell people, you know, they need to give me the full pile of crap. Like give me the pile of crap and I can figure out how to piece it together and put a bow on it and what needs to be done to get their dream of buying a home. I'm not going to babysit anybody. I'm not going to hold their hand, but I will definitely give them some guidance. And if they want to do it, then, you know, we can check in periodically and things like that. But Tetris wasn't my game by fault, apparently, because I can move pieces and figure out how to make it work.
All right. So, April, could you just say quickly where, I know you put it in the chat box, could you just verbally tell us where we can find you at, whether it's your website, whether it's your email, phone, how can people reach you?
Yeah, so my cell phone is the best way to get a hold of me, which my cell phone is 847-873-7278. My email address is my first name dot last name at rate.com. So it's APRIL dot RAN as in Nancy, ALLO at RATE.com. In order to get pre-approved, we are extremely techie of a company, which is great. They can go to my email and I can send them a link, or if they go to my website, which is just rate.com/April Ranallo, They can apply online, takes 10 to 15 minutes to fill out the application, pull credit, sends me all the information securely. That way I can run up an idea of numbers. And it's also the easiest way for me then to have like a more in-depth conversation, because I can send them a breakdown of numbers that then says, let's go over this. And I can tell you, hey, if rates change, this is about how much it changes your payment, or purchase price affects it this way. And we can just get more, specifics. It's easier for people to understand what's going on if they have something to visually look at and reference. And if I have the better picture, maybe they have great credit, but I can take a look at it and be like, hey, but if you tweak it this way or this way, your credit score would be even better, which could mean you could get a better interest rate when you find a home, something like that.
And I think what's important too, I just want to, echo what April had said earlier about, if you have any thought of buying a home at any time in the next 6 to 12 months, go ahead and start the process of getting pre-approved now. Don't wait till the last second, because also, like, if you think you have bad credit, most of the time it's not as bad as you think. I was in
very true
a couple of years ago where I thought I had bad credit, and what I had was no credit, and what it did is it took me no time at all to build it. All right. So don't wait. Just go see where you're at. Don't get in that mind state of like, oh, it's so overwhelming that I just can't deal with the reality of it, because 90% of the time it's never as bad as you think. It's usually better than you think. And then when you have somebody that can help you, point you in the right direction, again, she's not going to hold your hand and babysit you, but she will give you the red trail, right, or the yellow brick road to, hey, here's how you can get these things this house that you want in the future, but you want to start that planning process now, right?
They're my favorite too. The most excited clients I have are the ones who did not think they could buy a home, and I'm like, you're not that bad. We're fine. We can totally do this. And I mean, it's hard, you guys. Like, I understand, like, it's financial information, and it's, people with bankruptcies or foreclosures, like, everyone has been through it. Okay. If you're talking to any mortgage person who survived 2008, they probably have one themselves. Okay. So don't ever be worried about trying to go over. Nothing phases me when I look at anything. And I don't remember, like, it's funny. Like, I do loans for friends. I'm like, oh, but you're going to remember what I make. I'm like, I don't remember 2 hours later what you made or what your credit score was. I'm just on to the next file and the next set of numbers. So
all right. Well, look, I want to thank you, April, very much
for
taking time out of your Sunday and talking with us. I actually learned some new stuff I didn't know about. I hope a lot of you guys that are listening learned some new stuff and you're able to get some value added. I want to thank Kenny and Kenjay, Keon, Leah, Monique, Trace. I want to thank you guys for joining in. Anybody that joined in on Facebook, thank you very much. And hopefully we'll see you guys back here again next week. I'm not sure if I'm recording one live next week. I got something that's different is I talked to a nurse today that's been on the front lines of the coronavirus here in Minnesota. I think we might do a more of a discreet call because some people have been getting in trouble for talking about what's going on. But I thought it'd be important to kind of let people know what's really going on in these hospitals and behind closed doors. So we might do that next week. I'll keep you guys posted. But thank you, everybody, for joining. April, I'll talk to you Tuesday for sure, but maybe before that. Thank you again. Everybody enjoy the rest of your day. Thank you very much.
Thank you guys for coming. Have a great Sunday.
All right, bye-bye.